Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. All right, welcome to the Bossilator Watchlist webinar for the 20th of September 2011. We'll start off as we usually do with the watch list. There's a great question that came from Jim that said, could the Bossilator radar screen be stuck? It seems that a reading has been stuck on 1287 for the pound dollar since yesterday. That's a problem. Yeah, that's why right now it's free and we're working out the kinks. And I'll make a note and make sure we address that as soon as possible because, Scott, the pound dollar is certainly not still at the same number that it was a day ago. It's definitely overextended even further than it was a day ago.
Yeah, anytime the Bossilator produces here, it moves every single bar, so yeah, we got to get that fixed, definitely.
Here is our chart from yesterday. As you can see, the 15-minute pound dollar chart from yesterday. We saw the regular stochastic curl upward on this currency pair yesterday, and we're higher than we were then at that time. Individuals that took this trade or might have taken this trade could be at break even right now, could be better than break even. The crossover happened down here in the mid 56s, and right now we're at 57.10 or so on this currency pair, so up about 50. The target, as we discussed yesterday, is the 800 period simple moving average. At the very least, that's the target. And this currency pair hasn't been overbought on the regular stochastic for quite a while. You can see it missed. Every time it jumped up, it missed. We are soon, most likely anyway, headed to a time when this currency pair does hit the 800 period simple moving average. Any Bossilator reading over 1,000 is extraordinarily excessive. It does not happen very often. When it does happen, it's time to be on the lookout for trades. If you didn't get around to this one the first time around, you could look at a 5-minute chart and wait for this currency pair to dip down into oversold territory again. Down here below the 20 on the regular stochastic, you could wait for it to drop down into, say, the 56, 86 area. That would probably be enough to get this currency pair oversold again. It just depends on how much market activity is involved, and then pop back up. Of course, there's economic news coming out over the next couple of days, and some people are worried about that news and suspicious that that news coming out might affect their trades and blah, blah, blah. The Bossilator doesn't care that the Federal Open Market Committee has a decision to make, and the Bossilator doesn't care about Eurozone debt crises. The Bossilator cares that, statistically speaking, the pound dollar has a very low likelihood of ever reaching 1,500 on the 15-minute chart, and if you have a way to enter trades with really, really well-defined and small risk and giant reward, then trading based on those probabilities and those statistics is probably good enough. Somebody, Scott, mentioned yesterday they didn't want to trade the pound dollar because the fundamental picture didn't line up. And that thought carried in the back of my mind all day yesterday. And I wondered, well, what do we really know about the fundamentals on something like a currency? We don't know as much as we might think we know. And the fundamentals for the pound or for the dollar could be extraordinarily bad or extraordinarily good. But that doesn't affect the ability of this one currency pair to move up or down in either direction 100 pips. There's no effect whatsoever. Any currency pair at any time, regardless of fundamentals, can at any moment on any day move up or down 100 pips, and it doesn't make any difference. See what comments come through. Jim's still mentioning that the test radar screen has been frozen and is showing the same numbers day after day for a while here, and that's a good thing to know. The pound dollar is really the number one item on my Bossilator watch list. It's still the number one most important trade that I'm looking at, but I did want to look at one other and see if it's still setting up. No, it was the Euro Aussie, and apparently that's frozen as well. And so that was one I wanted to look at. I thought that might be frozen, and it was. Scott, do we have any stocks that you might be able to look at?
Well, sure. We can update from yesterday, and there's stuff going on right now too. So
Okay. Well, I'll answer a question that came through from someone saying, what is your target on the pound dollar 15-minute chart? And the answer is the 800 period simple moving average, which finds itself right now at 58.10. No less than that. Would be no smaller than that. I'll make Scott the presenter, and we'll take a look. Everything that we look at here with respect to stocks is also applicable to futures and applicable to Forex as well.
can you see my screen now? Oh, no. Wait.
Yes, your screen is popping up. And when Scott's done, I'm going to show a euro-dollar chart that's pretty interesting. So,
We talked about IPXL, Impact Laboratories, yesterday, and it was in serious.
Scott mentions that we were looking at IPXL yesterday on the 1-minute chart. That we discussed yesterday that the sideways movement in the currency pair made it very easy for the currency pair to go overbought and oversold in a sideways market. All that oscillator is doing is saying, how excessive is this movement that it's making right now compared to the movement that it was making in the last 30 candles? And if the last 30 candles are going sideways, then everything seems excessive. Now, given that, if somebody traded this and sold it, they would have stopped out. There's no question. There's two things one thing that Scott brought up and one thing that I'd like to let's say you're trading a 1-minute currency chart or you're trading a 1-minute stock chart. It doesn't really matter. You can wait for these overbought and oversold areas. You can also combine it with other elements. Scott, we could draw a trend line underneath those candles that were going upward this morning. And it's very easy to see that a combination of overbought with breaking a trend line is another method of looking for an entry on this. And if you didn't even get in on that one, then there's another method, which is waiting for a retest of this trend line that Scott just drew. And if it rises up and bounces off of that trend line, it's also going to be overbought. And that may be the best entry of all. Of all the possible entries, it requires the greatest amount of patience and the greatest amount of waiting. It requires a reading of over 1,000, a trend line to be drawn, the trend line to be broken, the trend line to be retested, and the stock to be overbought at the same time. That's a really nice combination and confluence of elements all at the same time. This could be a currency, this could be a futures contract, it could be a stock. It doesn't really matter. The same principles apply no matter what. What Scott just described, for those of you joining us on the recording, is Caterpillar. We looked at it on the 1-minute chart yesterday. When we looked yesterday, it was approximately 200 to 300 on the Bossilator. We talked about waiting until it reached a reading of at least 500, and we also are very fond of looking at things that are oversold on the regular stochastic. And Scott, if you scrunch those candles just a little bit more, you could see that if a person were to trade this on the first bullish candle after the move upward, at the 500 mark, the first bullish candle after that stochastic crossover, you're looking at a recent low at like 83.40 and a target of 84.80 perhaps. We're not talking about a giant amount. Scott brought up something really important. By the time that this became a candidate for trading, the risk to reward simply might not have been great enough to justify the trade. I've said it 1,000 million hundred of times. I don't want to trade anything on these that doesn't have a giant risk to reward in your favor. This probably had something along the lines of, if you account for commissions or slippage or spreads or all those other kinds of things, this probably had no better than 2-to-1 reward to risk. $2 of profit for every dollar risked. I'm not sure that's enough on a Bossilator trade. I really want to have enormous amounts of profit available to me for fairly low amounts of risk. And it looks here like there was $1 of movement available for maybe a half of a dollar, 50 cents of risk, or let's see. Yeah, about $1, right, Scott?
Yeah, it's to be about $1 reward, and if we went below the lows,
90, so 40.
So
So if you went below the recent lows, though, you went to 40, 83, 40. You could get below those lows right there. That's the one I would prefer. Keep that real tight. I mean, you could get 2 to 1. That is the bare minimum. That is like the super bare minimum. We're not the kind of people that are going to sit here and tell you we're going to teach you a 100% trading system so you can take trades that are 1 to 1 or whatever. Even if this does turn out to be something, and I think it will, that you have a very, very strong win percentage on, I'm still not going to tell you to take trades that have bad risk-to-reward ratios. I'm still not going to do it. I want you to have the best of both worlds. Let's see what any questions came up. The test would be resistance. Is it okay to stack the buy trades? Scott, that's a good question that people ask me frequently about these kinds of trades. What about stacking? And what about adding additional trades or pyramiding on top of the trades you take? We're going to talk about that next week. I'm going to save that conversation for next week. I don't think it's a great idea, not with leverage restrictions that exist in the U.S. If you can avoid the leverage restrictions by trading with an overseas broker because you're from overseas or whatever else, that might be more of a consideration. And we'll talk about that next week. Scott's got Procter & Gamble up here now on the 1-minute chart.
yeah, I believe we mentioned that last week. And this is about the time we talked about it this year, and that 12 o'clock Eastern time. We wanted it to come back up and maybe get overbought again. Again, kind of a flimsy overbought, but space again, the risk reward here was not good. It made it nearly all the way back. We could have taken the trade out near the 800. It did come back and get oversold again, but once again, not a good risk reward. So then it just hit. So probably couldn't have traded yesterday, but we did talk about it.
Right. Yeah, we're looking at Procter & Gamble and just talking about risk to reward for those of you watching the recording. And the trade set up. I mean, it did reach 500 plus. It reached 700 plus on the Bossilator, but we just couldn't necessarily get a really good risk to reward on this. You could draw a trend line underneath some of those candles on the left of the chart that you have open right here. You could do that. I mean, you could have exactly a trend line break there. But by the time that line broke, the comparison of where you'd need to put your stop to the place where you would put your profit target, it just doesn't make as much sense. And we do have a bias for buy trades on these markets. So when we're looking at Procter & Gamble, a giant corporation with fairly good fundamentals, we don't really want to sell it anyway. I mean, we'd love this to be a buy trade, perhaps. But if we're going to get a bad risk to reward on a stock that's got pretty good fundamentals and we're going to be selling it, this probably isn't a great fit. And hopefully that will help you understand, how fundamentals or the way that stock trading is slightly different than Forex. If this were a currency pair, we'd go for risk to reward, and the volatility in currencies is enough to simply provide the movement necessary to take the trade. But when you're looking at a stock, and there's such an upward bias in the stock market, and there's so many barriers to selling stocks and complications and finding shares to borrow and charges associated with it, that we won't find as many shorting opportunities in stocks, at least the major stocks, as we would with currencies or futures.
Yeah, we did talk about this right on the webinar yesterday. It broke at 12:03. So we even mentioned that, I believe. We said, well, Procter & Gamble is a sell right now. That
Right.
would have been pretty good.
Yes.
Right at that moment.
Right.
The reward would have been nice, and that would have been a successful trade. But if you waited till after the webinar, there wasn't really anything later today.
That's a good point to make. For the recording, for people watching the recording, Scott mentions that when we did the original webinar and we talked about Procter & Gamble, we did talk about this movement up here in the $64.10 range, where it reached a good Bossilator reading. It was coming out of overbought. Well, that's actually a reasonable entry with a fantastic risk to reward. But anything after that diminished the risk to reward and just made it more and more difficult to take anything that we would have considered. So.
Did you want to take a look at Netflix, or you want one more possibly a buy trade first?
Let's look at a buy trade. If you've got one, let's look at a possible buy.
I believe we mentioned GTAT. I just like saying that. GTAT. It's fun to say. We had, not too long ago, a nice fantastic break. This was our line from yesterday. It's still 1,200 bars away.
Right.
It's a pretty
Right. We have a trend line coming down across the tops of those candles too that it may retest for people watching this. It may retest these trend lines here. Yeah, exactly. And that's another opportunity perhaps to do the same thing.
Or a stochastic step back down.
Right. And if somebody missed this trade, they would just simply wait, because this could fall again and there could be another entry.
And you still got tons of room.
Yeah.
If you're patient on this again,
Scott, is that going to get back to the 800?
it is going to get back to the
Yeah.
That's correct.
It's going to happen eventually. Yeah, there's no question that it's going to happen eventually.
Well, that's an interesting point too. These things are complaints in the reporting, and that some people look at this system and everyone's doubtful because if you say an indicator is definitely going to work, then you're lying, of course. However, with the 800 moving average, what's so important to me is that it is 100% of the time going to touch the 800, because the math of the 800 is based on the actual price. And you tell people that, and sometimes it doesn't register. Everyone has to understand it will touch it. Now, how far it goes down or how far it goes up. But it's going to get there. When you get into a trade, there's a lot of space. It's easy to get, well, it's never going to get there. But it is. It's
Right.
going to get there for sure.
And the real questions are dealing with risk to reward. There's a reason that even though we believe that the 800 period simple moving average is going to be hit, we don't simply say just buy it and hold on to it forever. Because we don't want the stock to go to $1 before that happens. And so we're going to tie it, a risk management program right into what we're looking at here and combine something with a reasonably good probability of success with a good risk to reward methodology. And that's a combination that can last you for a whole lifetime of trading.
Well, exactly. It's going to hit it, but you can't just buy it. You have to have a risk management program, and you have to be able to make sure you don't lose all your money before it hits it. That's
Right.
really the secret.
Well, I'm fascinated, Scott, by Netflix. All the news right now is about Netflix. We have a huge amount of news about it. So what I'm going to do right now is I'm going to pause this recording, Scott, save it,